At some point, will earnings matter or will valuations matter?
Yeah, great question. So we've been saying focus on fundamentals. What's interesting, it's early in U.S. earnings season, but where we have the most information right now. About 13% of U.S. companies are reported, but this quarter is starting out very strong. 86% of companies beating expectations. That would be the second highest since 2008. As well, the average beat is big, 22% earnings surprise versus 6% on average. So that would be the second highest since 2008. So at first cut, that looks pretty promising. We also saw in the prior 2 quarters earnings beats. And given this is an exogenous shock, an endogenous shock, business models have changed and flexed faster, of course, than the market expected. And the markets, of course, have run into earnings as well.
All right. That brings into question now, I would imagine, looking at 2021. So we have a basic idea of what the base is like for EPS. Do you think markets have priced in, almost a Goldilocks scenario, if you will, for the vaccine rollout this year? Or do you think we have to recalibrate that given what we have seen? And granted, it is very early in the year, what we have seen so far these last few weeks, some problems rolling out that vaccine in many places around the world.
Yeah, I mean, clearly some of Goldilocks is priced in, but there's still upside to go. We're not expecting the same level of equity returns as last year globally, but we still are overweight equities. When you're talking about vaccine rollout, the key thing is where. So actually, the US and UK doesn't get much press, but if you look at the pace of the rollout, it's actually pretty good. We're already at Biden's target. They did over 1 million doses per day in the last 7 days. The UK is also rolling out very quickly, 10 doses per 100 in the population. And around 7 in the US per 100. Europe clearly is lagging at 2 per 100. And they're going to increase, we think, later in the year. But of course, EM is going to take longer. It depends on the country where they source from. And of course, we have uncertainties how the efficacy against other strains, et cetera. But the pace of the rollout is actually relatively promising in the lead countries. And one country I'm focusing on is Israel. Why Israel? Well, they've vaccinated 40% of the population. And we have some very early data, but we've seen that actually deaths of people over 60 have dropped roughly 60% after the initial doses.
Prashant, 2021 was supposed to be the year for the reflation trade. Has that died before it even got started properly?
Yeah, I mean, reflation trade, it's all about balance. So there are going to be periods where growth outperforms cyclicals and vice versa. But if you look since September, and we published a note then saying the vaccine will come earlier than expected, people weren't really talking about the vaccine then. We've seen cyclicals start to outperform from that time period. But you need to find balance in your portfolio. It's about growth and cyclicals, not one or the other. But our view is global GDP will grow around 5% this year. So there will be some room for cyclical shares in the portfolio.
You talked about emerging markets earlier. They've broken out. Is the trajectory of the EM space dependent on where the dollar is, whether we see a dollar rebound?
Yeah, it depends why the dollar's rebounding. Normally, if it's a risk-on environment and we're seeing recovery, non-dollar currencies outperform, in particular the currencies that have weaker fundamentals, that have current account deficit, budget deficits. Our view is for a moderately weaker dollar this year after a large move weaker last year. But overall, if that's the reason for the dollar weakness, that's good. If we have dollar strength because of risk off, you can have brief bouts of that, of course, and that's healthy. The dollar can get oversold, and we may have seen that in the last few weeks, a little bit of a bounce, but we're actually going to probably see more divergence between currency pairs overall between countries because the level of vaccine rollout and the level of fiscal monetary policy could vary more this year between countries.
And I guess on that note then, how would you suggest then to your clients, I would imagine this question might have come up, how do you invest along those lines that some countries will simply do much, much better than others in terms of the vaccine rollout, what you get with the recovery, and ultimately what you get in earnings in those countries?
Yeah. Overall, we think for example, the euro has been a little bit held back in the last weeks because they're behind, for example, the US and UK on the vaccine rollout. But we think there is room for euro as we go through the year closer to 125. When you're talking about emerging markets FX, overall, we're constructive across most EMFX because for there, we're going to see vaccines later in the year. But clearly, the expectations are also much lower for vaccine rollout. But economic growth will pick up in many of those countries. And if you think about what's happening on commodity prices, if you're looking what's happening on the cyclical shares in the market, that's a much bigger composition of emerging economies. So they should do a bit better as well in terms of EMFX as the year goes along.
Okay, now let's put everything together in terms of, it's been 12 months, roughly speaking, Prashant, since the virus kicked off and has really been the dominant story and has been the dominant theme for policymakers, central banks. I think we have the Fed this week. Is there anything outside the virus story that you think we should be paying a little bit more attention to at this point in time?
Yes, David, in the short term, clearly the U.S. fiscal stimulus, a lot of focus. That could be, mid-March. If we have an impeachment trial at the beginning of February, the last impeachment trial took about 3 weeks, so perhaps that's why they're pointing to that date. But keep in mind, we had $900 billion that was just passed at the end of December, so you have some insurance. But we do think a fiscal policy will come. It'll be about probably less than 1.9 trillion, a trillion, around the $1 trillion level, but that will come. That's nearly another 4.7% of GDP on top of what's already been done in December. So that's one potential rocky area in the very short term. Also, clearly, there's a lot of talk about taper. We think it's too early given unemployment. It's double where it was at the lows, 3.5%. And the Fed's going to let inflation run hotter. But clearly, that's something that's also a way for the markets in the short term. But we think you should taper any worries about the taper in also. And then thirdly, clearly, if there are problems with the vaccine efficacy, that will also be a setback.